In the House proposal, it says, and I'm going to try to remember the details, but it says that if a property insurance company writes property insurance in other states, then they write property insurance in other states to sell other kind of insurance in other states, they have to do a small percentage of that in Florida. So we're doing it on a very limited basis. It isn't just across the board. You know, if you sell other kind of insurance in other states, you gotta sell property insurance, but only those, for example, car insurance here, but not property insurance here. But you sell property insurance in other states, you have to do that here on a limited basis. But again, I think this is my philosophy about this. We can create all those kinds of laws that you want, but if it doesn't make business sense, if we don't create a climate to make business sense, they won't write it here. So I think the bigger issue, the bigger debate, the tougher decisions should be to the insurance companies. Tell us what you need from us in the legislature, because they will tell you all day long there's all kind of laws, all kind of statutes, all kind of barriers in Florida. Tell us what those barriers are. We'll do our job to get rid of those barriers. If they're bureaucratic barriers that doesn't make any sense, that's been created over time, then we'll get rid of those if you'll come back, write insurance, and the profits go back to the consumer, then we can have a fair game this week.
Well, I would hope the state wouldn't go too far down that path.
It's a very dangerous path to go down.
Because then you're ultimately going to be taking away choices in another arena, which will drive up prices.
That's exactly right. You have to be careful. I think government has to be very careful telling business what they're good at, and that's virtually what we're doing. And we shouldn't be doing that. We should be creating a climate for whatever business does well, that they can do that business even better in Florida than any other states. If we take that philosophy, I think we'll create the right kind of environment here.
And there may be some who would say, well, this is akin to saying that the Daily News has to sell newspapers in Navarre. And even if you decide, you make a business decision that it just doesn't make sense to deliver in Navarre, it doesn't make sense to have stands in Navarre, that by golly, the government's going to say, if you're going to sell newspapers in Northwest Florida, you got to sell newspapers in Navarre. So some people may say the two are akin to each other. Not quite, not quite. Because you didn't come to government and say, we want a protected market, like insurance companies did. You didn't come to government and say, we want a subsidized market. We want the full faith and credit of the state of Florida to be used to make sure that some of the risk of doing business is mitigated so that we don't have to go to California and get a bunch of working capital to operate the newspaper. You didn't ask for any of those protections. You didn't ask for regulation in the form of protection, and you didn't ask for subsidy. But once the insurance industry grabbed the flypaper of government subsidy and government regulation and government protection, then they took on a public responsibility. So then I agree with you, you don't want to go too far down that road, but I believe that you can say that since you've asked for and you've benefited from government involvement in your business. Now I know the insurance companies will say, well, we'd love the government to be out of our business, but there are a whole bunch of things that government does to protect and subsidize. We talked about some of them in this conversation. The minute, when you ask for that kind of government involvement, then you take on a public responsibility that goes beyond a private sector business, and therefore I think there is some reason to say that you should not just stay with your customer in the good times, but you need to stand beside your customer in the tough times too. First of all, that's good old-fashioned business ethics, and secondly, it's part of the bargain you make when you ask the government to become your business partner, and that in effect is what's happened with the insurance industry, for good or for ill.
I have one question. Ray talked a little bit about asking the insurers a little bit more, what do you need us to do to come back into our market? And talking to a lot of our readers over the past couple weeks about this insurance crisis, they haven't had that kind of tone with insurers. They talk about insurers who are making record profits. They want more transparency, if not regulation, of the kind of profits that insurance companies are realizing. They see insurers as overcharging them now so that they can underpay claims later and make more profit than ever before. And I'm wondering what your response is to that. I mean, they want government to be their advocate and squash that attitude a little bit. And so I guess I'm asking you what your response would be to that sentiment.
Well, I think they're right, and in the House and Senate bill, there are some what we call consumer protections in there. Kind of much more transparency. You may remember Speaker Rubio last week actually sent a letter to all the insurance companies that how they establish their model. In other words, how do you come up with ultimately what you send the bottom line to the consumer? And they've issued that model to them, so the legislature can look at, you know, what justifies a rate increase and the kind of commissions and just a breakdown of how they model, so to speak. That's very important, and that information will get to the consumer. Consumers want to know, consumers want flexibility, and I think insurance companies want flexibility. For example, in the House bill that we have, we say that you can actually get insurance based on the amount of mortgage that you owe on the house versus the value of the house. So that's one area of consumer protection. Some flexibility in the type of insurances that our consumers may want. So that's in there as well. Installment payments. Some insurance companies require just a one-time payment or break it down to two. In our legislation, we say that insurance companies don't have to provide installment payments, monthly installment payments, to make it more affordable, you know, to the consumer. And also, if you own your home, you don't have to have insurance. So there's some areas in there that we've tried to create some consumer protection. And again, any of the rate savings will go to the consumer. But there is no question that whenever our citizens in Florida and Northwest Florida read your paper and they see that insurance companies have the highest profit margin ever in the history of their companies, then they're sitting there looking at their mortgage bill saying, wait a minute, that doesn't even make sense. Well, we can sit here and I'm not going to be a defender of the insurance company. They should defend themselves. They could probably give a defense about that, but the fact is, we got to deal with the reality of getting to the transparency of what the insurance business is all about. And we in the House and Senate are very committed to that. And you'll see a lot of consumer issues coming out of this week, and transparency is at the forefront of what happens. So they'll understand and see what their bill actually means and the justification by the rate increase. I will tell you that the majority of the phone calls I get outside of the increases are that I hadn't had a claim. I've had a claim in 20 years, 25 years, 10 years, and people resent getting increases when they haven't had claims, when they see other people building buildings on a risky piece of land and negotiate, you know, other ways of getting insurance or maybe around it, or government subsidized insurance, and they resent that, and they should. And so we've got to bring some rhyme and reason to those arguments this week, and it won't all happen this week, but we'll have a good jump start, I think. So you're exactly right.
And Julie, if I could mention some specific things that we're working on. Some of them are in both the Senate and the House bills. Some of them are specific proposals I've made in the Senate Insurance Committee, and I'll identify those. First, under current law, not all rate increases have to be approved by an agency of state government. Some rate increases are on a kind of automatic pilot. I believe that all insurance rate increases need to have prior approval, and I'm pushing to get that in the Senate bill. Under current law, the burden of proof is on the Office of Insurance Regulation to prove that rate increases are excessive. So the regulator has to prove the insurance increase is excessive. What we want to do is change that to require that the insurer proves that rate increases are valid and necessary. Shift the burden of proof. Third, under current law, an insurer who gets a no from the Office of Insurance Regulation on a rate increase can automatically go to arbitration, where the Office of Insurance Regulation chooses one arbitrator, the insurance company does, and together they choose a third arbitrator, and then arbitration is binding. We want to change that so that a no to a rate increase is a no. Fourth, and this is something that Ray can speak to with more depth than I can, and that is under the